Alrighty guys, what is going up? Welcome back to the best investing money management channel on YouTube. I am your host Carter, and in today's video we are going to be talking about the one and only Twitter. Should you buy this stock or stay away from it in general? So breaking down the chart. Right now we are on a 1-year chart, and each candlestick represents a single day in the market. Okay, so just by looking at it, you guys can see we have a beautiful, beautiful upward trend, right? Really, this thing went from $34 all the way up to $80, sold off back down to about $66, where it's trading right now. It also did come in contact with the $50 mark, which was, a very hard support. So we got a lot of buying pressure entering. You guys can see it was undervalued on the RSI and everything like that. Okay, so a lot of momentum is behind Twitter. Okay, and a lot of people think that this stock is pretty much doomed for acceleration. And honestly, I see where they're coming from. Okay, so the thing about this is Twitter's revenue is up around 7.5, and that is around $3.7 billion. So it's a 7.5% increase from 2019, which that's pretty decent if you compare it to some other companies out there. But honestly, Facebook is growing their revenue at around 30 to 40%, which is absolutely crazy. But the thing about Twitter is it's faced by competition. Okay, so meaning there's a lot of social media sites out there nowadays, right? There's Facebook, there's Snapchat, there's TikTok, there's YouTube, there's a variety of social platforms. And the issue we face is how long can Twitter retain people on their site. They've been doing a good job over the past year or so, really increasing their advertisers and changing a little bit of their platform to make it more user friendly. All right, because it depends. Twitter depends a lot on advertisers, right? Actually, around 86% of their revenue does come from their advertisers. So I think that with them really proving that this is a good business model, I think that this is going to be a good company to buy in at. The 3-year chart for this stock is pretty decent. You guys can see it really didn't trade much. It really went from, the $45 mark all the way down to about the 22 and just kind of traded in there for a couple of years before recently we've gotten a lot more volatility behind this stock, meaning it goes up and down at more rapid rates for sure. And one of the most important things for any investment is the what? Cash on hand. And the reason why this is so important is because if Twitter ever slows down, you want to make sure that they have enough cash on hand to get through a hard time. Okay, so they have around $8.8 billion in cash, which is pretty good. And looking at their long-term debt, they only have around $4.2 billion in debt, which is honestly pretty freaking good. Not to mention, looking at their margin rate, it's negative 23%, meaning Twitter is not profitable yet, which is very common for companies not to be profitable. We have Snapchat not even profitable, Pinterest, a lot of other social media platforms aren't profitable yet. And the thing about it is once they do become profitable, in most cases, they have very good margin rates, very similar to, Facebook with that very high margin rate at around 56%, meaning for every $100 Facebook brings in, they profit around $56 compared to Twitter, where they actually lose about $23. Getting back to the revenue, you guys can see, it's up year over year at around 28%, which is very, very good. And the price ratios is we can't really have any of them because they don't make any profit. So for me, Twitter, what's the overall risk rating? Well, it's obviously going to be more of a medium to high risk just because of the volatility that we've seen from it. And it could possibly be a fad, but I really think looking out probably like a 2 to 3 year outlook, we should get a break above 100. That would be a very fair expectation. If Twitter continues to grow on their revenue and if they do become profitable, I think that we'll easily see this breaking out above 100. But on the flip side, if they start losing money, losing traction, can't get advertisers, then we could definitely see it back down to, the $30 or $20 mark just because of the volatility with it. So for me, Twitter is kind of one of these things where maybe I wouldn't go heavily in it, but it's probably good to take a little bit of a stab at it for sure. So that is it though. I hope you guys enjoyed the episode, and if you did, hit that like button and subscribe, and we will see you guys later in another video. Remember to stay happy, stay positive, and stay safe out there. Take care.